What's up, everybody? My name is Sarah Mobley. I am a realtor here in Charlotte, North Carolina with Ashley Lambert Realty, and today it's about home equity. Want to find out what it is, how you can increase it, and what you can use it for? Then stay tuned for the rest of this video. So what is home equity? Well, they say when you buy a home, you increase wealth, right? How does that actually happen? Well, it's all in the home equity. So home equity in its simplest form is how much you owe on the mortgage of your loan versus how much your home is actually worth. The difference between the two is home equity. So let's turn this into a real life example. Let's say 5 years ago, you purchased your home for $200,000, and to keep things simple, you mortgaged that home for $200,000. Within the 5 years, you were able to pay down your mortgage to $175,000, and when you put it on the market, its value is $225,000. $175,000 loan, $225,000 sales price. That $50,000 is what is the home equity you have in your home. So if you were to actually sell your home, then that $50,000 is your profit. That is how you build wealth. Now, those results are not typical. You normally will not see a $50,000 increase in value in such a short amount of time. However, there are ways that you can increase the equity in your home faster rather than slower. So let's talk about it. The first thing you can do is increase the amount that you pay in your down payment at the beginning of the process. So if you put down $10,000 for your down payment, you automatically have $10,000 in equity. If you put down $25,000 as a down payment, you get the point. You have $25,000 in equity from the beginning. So the more you can put down as a down payment, the more you own of your home from the start. The second way that you can increase equity in your home is to buy a new construction. So this isn't always going to be the case, but it is a really good way in which to increase the value of your home. Let me tell you why. One of my clients recently went under contract for a home here in Charlotte, and the sales representative we were working with at the development told us that about 12 months ago, when they first started building that community, the same exact floor plan that my client purchased was $14,000 less expensive than it was today. And that's because they have built additional homes, people have moved into those homes, so the community already has increased in value. The community won't be finished until, I believe, the end of 2020. So my clients, when they move into their home in April of this year, they'll be able to build that equity faster because the community isn't completely finished yet. So if you do buy a new construction home, definitely look into how much it was worth, how much it is worth, how much is it going to be worth throughout the development of the community. So that is definitely a great way to increase your equity without it coming directly out of your own pockets. And the third way that you can increase the equity is, well, if you watch HGTV like I do, you already know the answer, and that is to add value through improvements. So whether that's updating your kitchen, redoing your bathroom, the curb appeal, all of those things can add value. But be careful, because not everything that you do in making improvements to your home is going to have the best return on investment. Calculate the numbers and make sure that it makes sense for you and it makes sense for the long-term return on investment for your home. Okay? All right, so hopefully now you have a better idea of what home equity is and the ways that you can increase the equity in your home. But lastly, I just want to talk about what you can use it for. So in the first example, obviously, if you were to sell your home, the more home equity you have built up in your home, the more money you take home in your pockets. So that definitely benefits you in using that for the purchase of your next home. It allows you to give a larger down payment. or to buy down the interest rate, whichever one is going to benefit you and your family. But having more home equity, obviously, the better. Now, even if you're not ready to sell your home just yet, you still have access to the home equity that you've built up throughout your home ownership. So if you've owned your home for a few years, 10, 20 years, there's definitely home equity that you've built up, and you can have access to that through a home equity loan or a home equity line of credit. Now, I like to stay in my own lane, so if you are interested in either one of those credit options, you'll want to contact your bank and ask for additional information. But essentially, it allows you to tap into and borrow from the equity that you've accrued in your home. But why would you do that? Well, let's say you're ready to start a business, you have kids going to college, you want to buy a second home. All of those things can be used with the equity that you've accrued in your home. And normally you may find that it comes at a lower interest rate than getting a unsecured type of credit option. But again, not to go into too much detail, call your bank, ask for information on a home equity loan or a home equity line of credit, and see if that's something that can benefit you. And that's home equity in a nutshell. Hopefully there have been some light bulbs, some aha moments, or hopefully there's been a couple things that you can just take away and really help you in planning for building the equity in your home. Until next time, again, my name is Sarah Mobley, and I am always here to answer any questions that you have. To earn your business, if you or someone you know is looking to buy or sell their home, you can simply send me an email, info@liveinthequeencity.com. We'll talk soon. Have a great day.